Well, good morning, everyone. Hopefully you can all hear me, or good afternoon, depending on where you're calling in from. Thanks very much for your time. My name is Francis Wedin, and I'm the Executive Chair of Vulcan Energy. I also have on the line Cris Moreno, MD, CEO of Vulcan Energy as well. Today we're not going to take you through a presentation. This is just going to be a verbal update on the project, and we'll throw it open for any Q&A you might have. So I'll jump straight into it as we're on the hour now. Essentially, we're developing the zero carbon lithium project in southwest Germany in the Upper Rhine Valley bordering France. This is an integrated renewable energy and lithium chemicals project. And we're building a project, the first project in the world that will be producing lithium with a net zero carbon footprint and zero fossil fuels used in the process. We'll also be producing a co-product of renewable heat and power. Now, we're already a renewable energy producer, a renewable power producer, centered around our geothermal plants and wells at ESIA. And we're focused now on executing what we call our phase one development, and that is for 24,000 tons per annum of lithium hydroxide production and an associated renewable energy and heat production increase from the ESIA Landau area as well. We have completed our definitive feasibility study for phase one, and now we're going into what we call we're approaching completion of what we call our bridging study. This is to get us to approximately a class 2 estimate, so a much higher level of definition than the definitive feasibility study. And that's a precursor to locking in an EPCM contractor to help us execute this project, build this project. That bridging study is nearly complete. So in the next few weeks, we'll be wrapping that up. And what we have recently alluded to in our announcements, what we've recently announced, is that there were a number of value improvements in that bridging study, which we didn't have time to include in the DFS. So we think it's actually going to present, I mean, the DFS was very positive, but we think the bridging study is going to look even better. Mainly that surrounds the upstream. So we've revised our field development plan for the increase of brine production from the core of the field where we're currently producing lithium-rich hot brine. So we've revised that. We've reduced the risk for that. We've incorporated new data. And the headline is we're going from 2 plants in the upstream, one from the core area and one from a step-out area to the north, down to 1 plant. So there's obviously economies of scale and reduction of risk associated with that. So we've been working on this for a while, and yeah, pleased to say that's going very well at the moment. That is one of the pieces of the puzzle that needs to land in the next few weeks. There are a few other pieces of the puzzle that need to land as well, which we're expecting to land soon. We're doing what we call an ESIA, and this is for the bank debt financing that we'll be doing starting in November. The ESIA stands for Environmental, Social and Impact Assessment. Now, we don't need to do this according to the law here in Germany, but this is sort of a best practice exercise to measure our cumulative social and environmental impact, which hopefully will be net positive considering what we're doing. We're doing this study at the moment with ERM, and we'll be wrapping this up in the next few weeks as well. There's another piece of the puzzle, which is we have acquired most of the pieces of land that we need for our phase 1 development. We still have one final piece of land still to go, and that's being negotiated with the local city council of Landau. And this is a benefit to them as well, because we're also negotiating a heat offtake to supply the local city with renewable heat from our new operations going forward as well. So there will be a tangible benefit to local communities, literally flowing into the local neighborhoods around where we're building our plant. That is another piece of the puzzle that needs to land in the next few weeks, and we're expecting that to land by November or December this year. After those pieces of the puzzle land, we will be launching our full phase 1 financing. And this is a very big moment for the company. We have timed this financing so that it lines up with these final items that we need, including the bridging study. So we're going to go into it with a really good understanding of the CapEx and the OpEx of the project. Will have significantly lowered risk. In addition to that, it also dovetails in with some German government's grant schemes, which we'll be applying for as well. So the timing for that works well. Now, success there is not guaranteed. It's a competitive process, but there is potentially significant assistance available, which we will be applying for in tandem to the debt and equity financing process. The debt and equity financing process will kick off in mid-November. It will be led by BNP Paribas on the debt side. There are debt advisors, and this follows a market sounding process that was conducted earlier in the year. We have 24 commercial and development banks under NDA ready to go, who are very keen to be involved in the process. And I've been catching up with them in the last few days, some of them in Amsterdam. We have also garnered very significant export credit agency support. So at the moment, we have commitments subject to process, obviously, in the high hundreds of millions of euros from export credit agencies in France, Italy, Canada, and elsewhere as well. And we have been designated as a strategic project of national importance in France. We've been designated as a green project in Italy. And that enables the ECAs, the export credit agencies, to increase their coverage of the debt. And that's the intention for that is that ECA covered debt will have a lower cost of capital as well. So it's essentially underpinned by the ECAs, which is very favorable for us. So we're going to come out strong for the start of the financing with all of those key pieces of the puzzle in place. On the equity side, because we're raising approximately 1.5 billion euros for phase 1. On the equity side, we're looking to raise about 35% of that figure in equity. Now, a very important point, we are not looking to raise that equity at a top co level, so at a Vulcan co level. We're looking to raise that at the asset level. And once again, obviously success is not guaranteed here, but we have had a lot of interest, corporate interest, to participate in this phase 1 integrated renewable energy and lithium chemicals project at an asset level. What we've noticed is that the adsorption type direct lithium extraction that we'll be doing is starting to get a lot of interest from the oil and gas industry. Why? Because it's very similar to an oil and gas project, just minus the hydrocarbons. So you've got the wells and the pipelines in the upstream. You've essentially got an energy production process and a chemical refining process. And it's about integrating those different pieces of the puzzle together. And this is why, also part of the reason why we have the expertise of people like Cris in the organization, who comes originally from an oil and gas large-scale project execution background. But on the corporate side, it's interesting because oil and gas companies are starting to really get into the lithium sector and starting to encroach on the space of the more traditional miners. And that's because with adsorption type DLE, they are arguably better positioned to take advantage of this. So I think corporately, it's going to be very interesting, the interest that we're going to see on the equity side. And that is kicking off in the next few weeks as well, in mid-November. Other things to note, we are in the process of commissioning our optimization plants for the lithium extraction. This follows over 2.5 years of piloting, and we will be producing from that plant, which we call LEOP, Lithium Extraction Optimization Plant. We'll start producing in the next few months the first tons of lithium chemicals ever fully domestically produced in Europe. So that's going to be a big milestone for us and for the European lithium market, which we're very excited about. That optimization plant will continue running whilst we're doing the financing, and it will be a very important tool, I think, in that financing process. But it will also, I mean, the main purpose of it is really to continue to optimize our process, become a product qualification center for the tons of products that we'll be sending to our customers, and also to train our production team in a pre-commercial environment. It's essentially like a commercial demo. So it has all the same gear as the commercial plant has, just on a smaller scale. We also have a downstream version of that plant, which has been built offsite, and this is for the lithium hydroxide part. And Cris was at a shovel ceremony yesterday. The ground is being prepped there. It has been built offsite and will be transported on-site and connected in the next few weeks as well. And then we'll also be producing the lithium hydroxide side as well. So there's a lot happening in the next few weeks. It's going to be an exciting time for the company. It's going to be a very pivotal time for the company. I think the feedback from a lot of investors that we've had so far is that a lot of people are waiting for the financing. And I think a lot of people are waiting for that proof point of the larger scale optimization plants coming on stream. So we have this ahead of us. I think once we're fully financed for phase one, then it all just comes down to execution. And we have a great execution team that we built over the last few months, which Cris has been building and recruiting. They're ready to go. In fact, they're already working on sort of pre-execution matters, I would say, as well. We're obviously we've acquired the main pieces of land. In some cases, we've broken ground as well. So we're moving in the background. We're moving towards the execution of phase one. Once the full financing is completed, then we'll really start to accelerate those works. So it's a really exciting time. We are building the lithium supply chain with a side salad of renewable energy from the center of Europe for the European battery electric vehicle market. And this is happening right now. Just some other things to mention as well. Feedback that we've had recently is that it was a good decision to build the adsorption type direct lithium extraction expertise in-house at Vulcan. We're seeing continuous improvements on the sorbent performance, the VulSorb in-house sorbent performance, even since the DFS. So it's really important to have this in-house. We have Vulcan Labs, which is continually doing test work. The pilot plants continue to do test work and just continue to improve the process. So really important not to just buy this off the shelf from an external technology provider, we think, and to have this in-house. The wider impact of this and the potential value to shareholders is that we have one of the only Western made lithium extraction adsorbents available. Most of them come from Russia or China. And we're seeing a lot of interest, and indeed in the last few days, also at the Fast Markets conference as well, we were getting quite a bit of interest on the IP for our adsorption technology. This is applicable to brines elsewhere in the world, including in places like South America. We're seeing companies like Eramet, who have developed their sorbents quite close to us in the same resource field, and they've taken their sorbents to their project in Argentina. So this is applicable to brines worldwide. And as I said, there's a lot of companies who don't really want to be reliant in terms of supply chains on one supplier, and don't want to be reliant, frankly, on suppliers coming out of places like Russia. So there's a real opportunity for Vulcan with that VulSorb IP in-house. Now we are focused fully on phase one, but it's a medium-term opportunity that we're progressing in the background. So Vulcan is a lithium extraction technology company, as well as a lithium project developer now. So that's a space to keep an eye on as well as being a renewable energy company as well. So we have a lot of value, I think, in the company that we're progressing. I'll leave it there. Cris, I'm not sure if you had any other points to add to that as well before we go to Q&A.
Maybe just a few things on some recent announcements. We would have hopefully seen yesterday that we've now acquired another license in the northern part of the Upper Rhine Valley near Frankfurt. Quite strategic for us. It's another license area that's side by side our Reed license. A lot of industrial users towards Frankfurt, some of the largest industrial chemical parks, and of course the Frankfurt Airport, which is a major user of energy. So we're really well positioned now strategically to start to really support that demand. So I think we'll see what happens and transpires. It's still hopefully very lithium rich as well, so we can support the geothermal power and heat, but at the same time look for the lithium. And I don't know, Francis, if you want to mention a bit on the potential reserves and resources update that will be coming out soon.
Yeah, thanks, Cris. Yeah, so I mean, it's a really good point. I mean, we have this really large project area with plenty of scope for phase development beyond phase one. Once we've done phase one and we've done it really well, there is great potential to grow in a phased manner. We see the brine is remarkably consistent across the Upper Rhine Valley, so very consistent lithium grades, and the rest of the chemistry in the brine and the heat, remarkable consistency. So we think we really have the opportunity here to print and repeat phase one and grow, another 24,000 tons per annum. So that's hopefully ahead of us. What Cris has mentioned as well is really important. We can potentially get the geothermal part, so the geothermal wells to bring this brine up to the surface. We can potentially deal with corporates or communities who want the renewable heat that we can provide, and we can get the renewable energy, the brine infrastructure to front run, essentially, so we can get that built before we come in with the lithium extraction afterwards. So we can still progress those future phase areas in the background, and we can do that by building renewable energy projects, essentially. And Cris made a good point. So we are, as part of the bridging study, I mentioned we revised our field development plan to lower the risk on the upstream. We've gone from 2 development areas to 1, and it's all centered around the existing producing wells, so that greatly lowers the risk. And as part of that, we'll be updating our resources and reserves, and we'll be updating the market on that quite shortly. So that will be coming out. That will be coming out fairly shortly in advance of the bridging study. Thanks, Cris, and thanks everyone for your time so far. I'll throw it open for questions then. So I think there's already a couple coming in. So the first one is from Pierre. What do you see as the biggest risk to achieving phase one? What are the key issues that have been flagged by ERM? Any comments on the recent share price weakness? So there's a few questions in there. Biggest risk to achieving phase one. I mean, at the moment, honestly, I mean, the biggest task ahead of us is the financing. So I think we have a really good plan there, and I think we have tremendous interest on the debt side and on the equity side, and the potential to further lower the capex amount that we need to raise for with public funds as well, potentially. So in the coming weeks and months, hopefully we'll remove that risk, reduce and remove that risk. But I'd say that's probably the biggest hurdle at the moment. Once we've crossed that, then it's just all about execution. I don't really see, and I don't think the team really sees much technical risk. I'm not sure, Cris, if you have a comment on that.
No, look, I think we can split it into pre-execution and then execution risk. I think you're spot on, Francis. I think the understanding of how the financing will be completed and its timeliness, I think, has a bearing on how quick we can go. So I think we need to be aware of that. And of course, we're in Germany. It's a very regulated country where we haven't got all of our permits. We're in very good relationship with the mining authority, who basically provide and issue majority of the permits that we need. So we're doing really well with that engagement, but we haven't received all permits. So again, we're very confident that they'll be received in time, but these are all risks that we still need to manage to maintain the current timeline.
Thanks, Cris. And the other question was about key issues that have been flagged with the ESIA. Well, nothing's been flagged actually so far. So we've been through the scoping phase of that, and nothing's been flagged. So that's all progressing well. we've had tremendously positive feedback from ERM on the study so far. Anecdotally, they've said that this is the best project they've worked on with regards to sort of environmental and social impacts. To be honest, we would expect that because we have designed this project to be sort of best in class. So I think we've had tremendously positive response on that. Bear in mind, in terms of our footprint, we are building a chemical plant within a chemical park. And we are building in the upstream, we're building production sites, but we've already pre-screened them to be outside of anywhere that, you know, is remotely environmentally sensitive. So essentially we're building production sites on pieces of farmland, and our lithium extraction and geothermal plant is being built in an industrial zone. So the impact on the environment from that side is almost non-existent. And then we have the net positive effect of providing renewable energy and zero carbon lithium to the market as well. So hopefully the impact is net positive. The thorny question of any comments on the recent share price weakness. Unfortunately, I don't know what to say there. Candidly, I think we seem to be moving with the general markets at the moment, and the lithium price is obviously going through a trough at the moment. It is going to be volatile over the next few years. The lithium market is growing by an order of magnitude, really, over a very short space of time. It's going from a very small market to a larger market. And every time there's more demand or there's more supply, you get this dramatic swing in price. That's why we have lithium offtakes. So we should see hopefully much steadier pricing when we go into production. But the markets, I don't think the wider market doesn't really differentiate and just, you know, lithium is either going up or going down. So I think that's generally what we see. I mean, a general comment, obviously the share price is much weaker than it was in 2021. And back then we had sort of 15, 20 people in the company. Now we have 320 people, you know, actively executing, building this project. And we built so much value up in the company over the last 2 years and de-risked so much. So it doesn't really make much sense to me, but I think everyone says the market is always right. I think the market is right in the long term. So I'm hoping that as we continue to execute and de-risk this project, and I think some of the milestones coming up in the next few weeks will contribute to that. Hopefully the value will come back. Thanks, Pierre. Then Suranga says, once phase 1 is successful, how long will it take phase 2, 3, 4, or will that take years again? And also phase 1 production of 24,000 tons per annum of lithium, is this an estimate, or are you confident of achieving this target? Why not 25 or 30 or 23K? In terms of the future phase developments, as I said, I think there is an opportunity to build some of the infrastructure with financing from the renewable energy side, from renewable energy customers and renewable energy investors. So I think we have the opportunity for some of that development to progress, let's say sort of sub-parallel to phase 1 progressing. So we'll see how those discussions go. We are in discussions with a few corporates on that for our future phases in our license areas. So there is scope to push things forward while also focus on phase 1. Otherwise, it's mostly a question of financing, to be honest. So once we've done the phase 1 financing, once the execution team is fully locked in on that, then we can start to look more seriously at building the next phase as well and the financing to do so. It's really an availability of capital issue. If we can find the capital, then we can build the future phases as well. In terms of the production of 24,000 tons per annum lithium hydroxide, I'm not sure, Cris, do you want to comment on that at all?
Yeah, and maybe a quick comment on the one before. I mean, the good thing with the ability to go fast in future phases that we do see, and we are having pre-investment in some of those phases actually with the existing facilities. So if you take the lithium, central lithium plant up in Höchst, you know, phase 2 is going to be a very easy build because we're pre-investing in a number of the utilities and parts of the infrastructure. So phase 2 should go quicker when we're ready to go with that capital. So small comment there. 24,000 tonne, it's a good question. Interestingly enough, the 24,000 tonne is a bit of a standard sizing across a lot of the lithium industry, whether it's hard rock or even on the brine side. So when you see a lot of the equipment involved in the processing, I'll give you an example, like a crystallizer. Many out there are designed for that capacity, and therefore it becomes a bit of a standard design. It all has design margins, so we can push it harder. So, you know, if we see good production and we see stable production, we can try and push through that design margin and produce 24, 24.5, 25 and more. And the only reason you would be less is because, you know, you've got some reliability issues. So the target's 24. We can go higher. It would all be based on how we improve our optimization of that plant.
Thanks, Cris. And thanks to Saranga for the question. Markan says, when do you see the share price recovering? I think I've already provided an answer for that, so I won't sort of dwell on that. I think when we tick off those remaining milestones for de-risking the project, the bridging study, the last piece of land that we need, and the financing, I think, and also the optimization plants getting up and running, hopefully that will contribute to, you know, the market recognizing that this is a very de-risked project and this is heading towards execution and then production. So hopefully that will build the value back into the share price. Another question from Saranga about the Graben-Neudorf project closer to our area. They recently recorded the highest heat borehole in Germany. If that's the case, will that be an issue for you? Any collaboration with them later so you don't have to drill like at Landau? Look, I think, I mean, it's a good question. I mean, it's very positive results. They've, I mean, they're drilling in the Upper Rhine Valley in a more sort of greenfields area, and they have higher heats than expected. I think the flip side of that is they've had to change their plant's design to cope with the higher heat. But ultimately, you know, they're going to be producing more energy out of it. So that's a good problem to have. We're drilling right next to our existing production at Insheim and Landau. So we have production and re-injection wells producing right as we speak, and we're just drilling nearby basically to increase production from this area. So we don't see much of a risk that we will get something unexpected from the field development plan from the new production and re-injection wells. So I don't think we'll sort of see a dramatic difference in heat. And you know, the wells that we have, the production re-injection wells at the Insheim and Landau plants, they also have very similar brine and heat and you know, other conditions as well. So no, I don't see that will be an issue for us. And as I said, for sort of future step out areas, if you get high heat, that's probably a good problem to have. We're not in discussions, any active discussions with them about a collaboration, but look, the more renewable energy infrastructure, geothermal brine infrastructure that gets built across the Upper Rhine Valley, the better. It's better for the environment, and also in the future, sure, why not? We're happy to have a chat with anybody about lithium extraction from those brines. Is LIOP experiencing any issues? Any updates can you provide there? No, it's in the commissioning phase now. No issues so far, so I think it's all progressing on track. Question from Javier. Could you explain more on the possibility of replicating the same project across more locations? I mean, being the brine consistent across the Rhine Valley. Well, we have about 1,700 square kilometers of license area across the Rhine Valley. And we think the brine field extends really right across those locations. And that's supported by the fact that wherever we've tested from existing wells right across the Upper Rhine Valley region, across hundreds of kilometers, the lithium grades in the brine are remarkably consistent, and the multi-elements geochemistry in the brine is remarkably consistent. This is because I think it's a sedimentary hosted brine. It's a large sandstone unit, and I think that contributes to the consistency. So our pilot plant has already operated at multiple locations, at multiple well locations across the Rhine Valley, and produced very similar results. So we think there's a definitely a possibility to really have a sort of a plug and play, print and repeat approach. Hopefully that answers your question, Javier. Andres, what feedback have potential partners provided when you showed them the DFS data? What were their concerns? Are they addressed in the bridging study? How is feedback varied across oil and gas, utilities, lithium companies, battery or auto manufacturers? Good question. Yeah, I think, I mean, we haven't been sort of actively really engaged in the last few weeks with potential partners. It's more sort of been keeping people warm for when the bridging study is complete. But the conversations we have had, I think very few concerns, I would say. And I think the concerns that were raised have now been dealt with. So one of them was, I think, the increased risk with 2 upstream production centers. And we've taken that down to 1. And we've pushed the second production center, which was more of a step out area, so higher subsurface risk. We've pushed that to a future phase, and so we've reduced the subsurface risk. So I think that's something that's been substantially dealt with. And I think on the lithium extraction side, there was no concerns. I mean, I think there's a much better understanding today in the market about adsorption type lithium extraction. You know, Livent's building their second phase of production after producing since 1996. Eramet's about to go into production with their plant. All of these oil and gas companies getting into it in the US. You know, Compass Minerals building their first phase of production as well. And the producers in China, you know, there's about 80,000 tons per annum lithium carbonate equivalent coming out of China from adsorption type DLE projects. If you put the South American production on top of that, close to 100,000 tons, it's basically 10% of the global market comes from this type of lithium extraction. So I think technology-wise, they're very comfortable, the strategics we speak to. How's feedback varied? Well, obviously the oil and gas companies go more into the technical detail, I would say, than the automakers. But understand, I mean, you know, the other types of strategics like battery or automakers, they engage technical consultants as well, so they also go into the technical detail. And the off-takers that we've had to date have conducted a pretty detailed technical due diligence with technical advisors. So it varies, but it doesn't vary that much. Potential view on green premiums. Well, I do think there's going to be a green premium and a strategic premium that develops in the lithium space. You know, I think there's a geopolitical premium that is developing. It's for better or for worse, it's just the world that we live in today, that supply chains are localizing. And we certainly see a strong desire from auto and battery manufacturers to localize their supply chains in Europe. The European auto industry is fighting off competition from China. And the flip side of that is that, you know, a lot of the batteries and the critical raw materials come from China. So there is a very strong focus on building out that local supply chain. So both on the geopolitical side, also on the sustainability side, I think there will be a premium developing for projects like ours. Philip asks, on what basis are the export credit agencies getting involved? Yeah, so there's a number of different bases that they're using to get involved. Typically, it involves export of services or equipment. So, for instance, from Italy, we're buying the renewable energy plant. And you know, there's services coming out of other countries, there's equipment coming out of other countries like Canada, etc. But it does get wider than that. So, for instance, in France, we're supplying the French automakers with lithium hydroxide. So, on the basis that there's products flowing into the French battery and automotive industry, we're supported by the French Export Credit Agency. So there's a number of different reasons really that the ECAs can get involved. And as I said, because we're a strategic project and a green project, that coverage can sometimes be, you know, doubled or tripled. So that's the basis. Thanks, Saranga, for your comments. Appreciate that. Russell, which is going to be the biggest contributor to the company's finances in the future, thermal offtake or lithium production? Lithium, once we're in production. So over 80% of the revenues from phase one will come from lithium hydroxide. So we become a lithium company with a byproduct of renewable energy, which is nice to have. At the moment, we're commercially producing renewable energy. So 100% of the revenue pretty much is coming from renewable energy now, but obviously this is a small scale compared to what we're building in phase one. Andres asks, why do you still expect to maintain your DFS level of 24,000 tonne per annum lithium hydroxide, despite now building only one DLE plant instead of two? Good question, Andres. Essentially because we have a revised field development plan with new data and also, I'd say, more rigorous interpretation from the reservoir engineers that we have in the company, who have also come from the oil and gas industry. And what this is showing us is that we can increase production from the core part of the phase one area and still maintain that 24,000 tons per annum. And, you know, this is with the different modeling that has been done for, you know, pessimistic case, medium case, optimistic case. You know, we've done the P10, P50, P90. And we have a very robust, I think, rigorous subsurface model, and it's looking very good for the core of that field. And that, as we said, that really reduces risk as well, and hopefully reduces the cost as well. Nilesh from Auckland, New Zealand. I've been a very loyal investor of Vulcan since it was only 25 million market cap. Good to hear. Can you please explain the equity dilution plan in detail, please, as part of the financing in November? Thanks, Nilesh. Look, I can only speak to our targets. I can't put my hand on my heart and tell you that there will be, you know, no more dilution at Topco. But I'm obviously the largest shareholder still in the company, and I'm very incentivized to keep the dilution as low as possible. We are trying to raise the equity side of the phase one capex at an asset level. So what that means is we'll be doing a joint venture sell down for the phase one project co. And we'll see how successful we are with this. Hopefully we can pull that off. But if we do so, then hopefully we get to you know, completion of phase one financing with minimal dilution at Topco. That is the target. We still have a very tight capital structure. You know, circa 170 million shares on issue, and you know, my target is to get to essentially start a phase one production with less than 200 million shares on issue. That would be a great result. That's our target, and we'll see if we can pull it off in the coming weeks and months. Another question from Saranga. Thanks, Saranga. I know lithium takes the crown profit-wise, but how's the margins on geothermal energy? Can they be viable businesses by themselves? Yes, they can. I mean, I think the existing lithium projects around our region, they have been quite marginal. They haven't made a lot of money, to be honest. But the next generation of geothermal projects, including our own, but also built elsewhere, like around Munich, they are bigger. They have more economies of scale. It's still an infrastructure energy asset, so you're talking about probably a single-digit IRR, like 8-9%. But they should still be profitable, and they're interesting for renewable energy investors, infrastructure investors. So it's certainly a side of the business that in future, I think could be interesting, even as potentially as a spin out. And I'm talking way into the future here, but you know, I think there's a potential for Vulcan to split into sort of renewable energy co and lithium co, because I don't think the market is valuing the renewable energy side at the moment. But no, they should be profitable in their own right. Okay, so we've got 5 minutes remaining. We'll probably have to start wrapping up now. There's a question from Ken. The first tons of lithium chloride concentrate ever domestically produced in Europe is a great line. Thank you. How hard can you push that? How are the German public taking to Vulcan? Well, we have a lot of German investors, some of which may be on the call today. If so, hello. And we are listed on the Frankfurt Stock Exchange on the Prime Standard segment. We are, I think, very well received here. I mean, we're a majority in terms of people in the company. It's a majority German company from that aspect, although our people come from all over the world. I think we've seen really good coverage of Vulcan in the mainstream German press. We have very strong support from federal and state politicians, and at a local level with mayors, etc. as well. So I think Vulcan is very well received. I mean, obviously, we're providing a product which is critical to the German auto industry, and the auto industry is the biggest industry in Germany. So I think what we're doing is very well received. And so hopefully that'll continue to be the case. When we do open, when we complete commissioning of our optimization plant and we do start producing the first tons of lithium chloride in Europe, we will obviously be doing a sort of a formal opening ceremony, and hopefully that will be very well received. Thanks for that, Ken, and thanks everyone for your questions. Thanks for your time. We'll aim to do these more often in the future, and hopefully the next time we do this, we'll be coming off the back of the bridging study with some more information to give you on the project and more progress on the project execution. So thanks very much, and thanks to Cris as well. And we look forward to chatting to you next time. Cheers.
Thanks, everyone.